Let's discuss what happened in the crypto market a few days ago. We had a massive liquidation event. The average number hovering around, depending on your source, is about 30 billion, which is huge. We had prices wick to 0.1. Some altcoins went down 99%. People who were even on 1.5x leverage got liquidated. It was a terrible day. So let's discuss what happened. There's a lot of weird information on social media, so I'm just looking to explain the basics and not go into the tinfoil hat theories that you're seeing on social media. Before I get into what actually happened a few days ago, there's a few pieces of terminology that's important to understand before going forward. So in every single market, there's something called market makers. Market makers simply provide liquidity. It's something that people get wrong constantly. There's constant debates about it, but all they do is simply provide liquidity. Okay, so they're on both the buy and the sell side. They're providing liquidity for buyers and sellers. Some of the big market makers have rebates with exchanges and certain deals with exchanges based on total volume. That's all normal. This has been a thing for years. It's always been a thing. There's nothing new about it. So there are times when market makers are not delta neutral. So delta neutral is they have equal exposure on the buy and sell side. So really, they shouldn't be getting hurt too badly in the event of some kind of move. So with that being said, there are times when market makers get caught out and they are forced to pull liquidity from certain order books in order to protect themselves. So in the event of a liquidation cascade, market makers are mostly forced to pull liquidity from the books in order to protect themselves. So a few days ago, we had a headline that said Trump was considering putting more tariffs on China because of something that happened. Okay, so Bitcoin started to sell off, and that's kind of when everything started to go sideways, is when that headline came out. So you need to imagine what's going on below price or above price at any given time. There are a ton of stop losses, liquidations, everything below and above price at every single second of every day. So when you have a large move, it kind of makes sense that you're going to get long lower wicks, right? But in the event of a liquidation cascade, it's even worse than that because the market makers have pulled their liquidity and there's still people continuing to get liquidated and stopped out, but there's no one on the other side to actually buy and fill at those stop loss prices and liquidation prices. So what happens is price accelerates further because there's no buyers to be found, and there's now a ton of liquidity entering into the markets. With price going lower, there's even more stops, more liquidations, but there's no one on the other side to fill those stops and liquidations, which is typically what a market maker would do, is fill in those areas, right? Because they're providing liquidity everywhere in the books. But if the market makers are not there, there's no one to absorb that selling, and you get a cascade and price fully rolling over until price pretty much hit zero in this recent event. Now, a few years ago, not even a few years ago now, several years ago, we were all pretty much trading on a platform called BitMEX. And what BitMEX did with liquidations is they would have a liquidation wall. The max was 10 million. So you could see the liquidation wall in the books, and that liquidation wall would continue to press price down until there was enough buyers and we bought into that liquidation wall. Now that in itself was kind of a scam because the max was 10 million in liquidations and typically there was more in liquidations, but regardless, that was a really good way to kind of think of the markets and understand what was going on behind the scenes. Is you kind of have this huge tsunami, if you will, of volume that needs buyers, that isn't getting buyers, and as price gets pushed down further and further, you have no one filling that liquidation wall, and it just keeps pushing until we finally get the buyers, until orders finally start to process and we could bounce and create a massive long lower wick. So during a liquidation cascade, you'll notice that spot exchanges and spot books are a lot less wicky than perp books are. Now, maybe that's not the case for the event a few days ago, but the general blanket statement is spot books typically hold up a lot better than perp books. What's the reason for that? And the reason is very simple. It's just leverage exposure. So on spot, if you have $100,000 in your account, you're taking a position worth the total value of $100,000, right? So let's say that's much easier to absorb, that stop out if and when you get stopped out, or if you just hold whatever. But let's say you have a stop loss, right? Much easier to absorb. Now, on the contrary, if within the perp books, you have a lot more volume exposure. So that same $100,000 of capital can be $1 million, extremely easy. 2 million, 3 million, 4 million, very, very easy. So that's still volume in the books that needs to be absorbed. That's still an open position. So when that rolls over, you get an even worse effect than just a normal liquidation cascade. So the big question is, what can I do in the event of a liquidation cascade? With the liquidation cascade of a few days ago, there was quite literally nothing you could do. If you had any leverage exposure, you were getting liquidated, and it's unfortunate, but that's kind of the game that we play if we're using leverage on our positions. It sucks, but it is what it is. If you were someone that got caught out pretty heavily, I think it's a really good learning opportunity, which makes me sound like kind of an ass, but it genuinely is a really great learning opportunity to dial back the leverage. I think it's very easy to get caught up in massive leverage trades because of social media, but this is a really great, sobering reminder that leverage is never the answer, and it's always much safer to use spot positions and never artificially inflate your trading stack with the use of leverage. So hopefully that gives you a little bit of insight into what's actually happening behind the scenes during these leverage wipeouts and these liquidation events. It's usually a very awful time in the market. This is the worst one we've ever had, but at least you kind of know what's going on behind the scenes and you can hopefully avoid them next time. And just remember it. Remember this event, remember how it impacted you and impacted your trading stack and the entire market, and see how you can implement changes going further. So I hope you enjoyed this video. I hope it answered some questions for you. And if you have any other further questions, comments, anything like that, please feel free to ask. Thank you.